Hey guys, this is Simon with Trade and Perform Coaching. Doing a trade review for Friday's trade and the preview for Monday. So first I want to kind of cover what happened Monday, how we could have told what the price action was going to look like, and basically how we could have improved our trading, right? We always want to take in our journals what we could have done better, what we could have done worse, and how we could have improved upon it. Okay, so first of all, let's go and take a look at the profile coming into Friday, both the 24-hour and the RTH. Okay, so this is the 24-hour. Here we are on Friday, and you would have seen we had two areas of concern that I was looking at. First of all, 23.59 to 23.57. We had this little tiny lip I wasn't so concerned about, but then this area right here. So really, if I was going to split it up, the areas I was really interested in was 23.59 to 57 and 23.53 to 23.51. And then my upside goal right now is to get to this 23.73 to 23.75. So that's quite doable, right? We had closed the prior day at approximately 23.68, right? That would have put us up 10 points. The average ES trading day has been between 7 and 15 points. With the exception of this two monster days we had here, or 3 monster days we've had this month. That has been the expectation, right? So what we needed in order to push to the upside was two things. We needed to hold above 23.59, and we had to get above the prior day's high of 23.66. One we were able to do, the other one we were unable to do. But remember, when we're coming into the day, we're looking at it from two perspectives. So let's jump over and see what the RTH had to show us, right? So if you look on the RTH, the HVN was actually quite the opposite, right? So we had the 23.59 on the 24-hour, and on the RTH platform, right, we had, remember this, we had this area right through here, which was at 23.62 to 23.65, and that generally ended up marking the top. Now, unlike some people with market profile, I don't look at it as religion. I look at it as kind of a topographical view of where the market could go. And lately I've been leaning more towards the 24-hour than the RTH. And the reason for that is the market's expanded and its rotations have gone to a 24-hour rotation versus we have gone to a 24-hour rotation versus a RTH rotation as being the most important. So it's interesting, when you looked on the ES profile, right, you can see that we had a huge chunk of volume go off right here between 23.57 and 23.53. So the first thing that tells me, looking at it from the RTH, and that was the prior day's low, right, is that, first of all, in order to be bearish, we have to get below 23.53. So that's the first thing I'd put in the notes. We've been unable to get below 23.53 if you'll look in the past, not too distant, right? That turned out to be a major rejection point before we pushed lower, was that same 23.57 to 23.53. We closed right below there, and then we closed right above, backside tested into the same area, and so this 23.57 to 23.53 has become very important. And you'll see this evening, I'm recording this at 9:54 p.m. Central Time, 23.56 was the low. So I know already on my radar for tomorrow is at 23.53 to 23.57. If we're trading below, right, and we push back up, that would be a point where I would look to target that area to exit my longs if I was long from below. And additionally, I would look to potentially take a short from that location, although the market is very bullish and I'm very hesitant to take shorts, right? What would be a target below 23.43? Well, do you see here we have this outstanding low volume node sitting right in here, right? And that's approximately 23.43, 23.45, and the bottom of that is 23.42.50, right? I want to go look at that same area, and you'll notice we've had a lot of trading activity right in that area, right? That same area on a 24-hour chart. My wife calling me. You look at that same area, and on the 24-hour chart, we have a beautiful build right there at 2342 to 2339. So what that tells me is starting at 2345, right here, you'll see that low volume node appear right there again. I'll blow that up so you can see it really clearly. Pull it over, I blew it up a little too much. We're going to spread it out. So see how we have all those single, on a TPO, we have all those single digits, and really starts a hair higher, 2346, and it goes right there to 2344. So I'm going to take my trading journal. Give me just a second. I'm going to grab that. So the first thing I want to do is I want to write down that I had those single digit prints between 2346 and 2344 on my trade plan. Because I want to be aware of them. I don't want to be caught flat-footed, right? 2346 to 2343. Look for evidence of a reversal. Okay, now I got that. So now I've got an area. Now I want to consider a couple things. First of all, can we get there from where we're trading? Right now we're trading 2359. If we trade down to 2346, right, that's 2360. It's approximately a 15-point rotation. That's 15 to 20 down, right? And I know from my history that that's a key location. Okay, so one of the things I do with my coaching clients is when I see something like that, I'm going to take this, I'm going to copy it, and I'm going to paste it. Because what I want to know is, have we had a situation like that in the past? Right? This is how I teach myself and how I teach my clients. So have we had an area like that in the past where there is a single point, single prints, right? And what does the market do when it gets to those single prints? So there's a couple of examples that we can have. So the first thing I'd want to see would have been right here on the 24th, right? So how can I find out what happened? Very simple, and I'm going to show y'all. Because I want to learn the behavior. It's not enough just to know that they're there. I want to learn the behavior. Now, it's not uncommon to get single prints on the bottom. Let's go see what the market did when we got to those single points on the 27th. So we're going to highlight this area, right? And then we're going to, so I don't destroy the chart, we're going to right click, copy it. I'm going to put this on pause for a second. So what you'll notice is, now this is from the 24th. This is early in the morning on the 26th, right? Leading to the 27th. So this is Sunday evening. So you notice we'll open, right? We get into that same 33.31 where we have the single digit prints, right? You'll see the market first came in and we rotated. We come in, we consolidated, attempt to re-auction. You'll notice those single prints will often look like a single doji. So what I'm trying to do is help my coaching clients, right, get from what the individual looks like, what that individual looks like, both on the volume profile and on the chart itself. So very poorly auctioned. Now most people will consider this, right, a support area. If you go look at most candlestick books, it'll say when you get a reversal bar like this, this is considered support. So you'll see we came in, we initially rotate up, we come in, we consolidate. How long do we consolidate? It was Asia, right? So we consolidate for quite a while. Then you'll notice we break down. These are very unique patterns, right? Come all the way up and backside test. Why did we backside test, guys? Let me get rid of this. Why did we backside test right here? Because this was support. That's exactly what that means. When you see those low volume nodes, we came in, we attempted to hold, we failed, we got underneath, and your short location was right underneath, and we rolled over. So what happened? So we know now that this is a critical area coming in to the following day, right? We know that if we get above this area now, we've recaptured support and we can push back to the upside. So now let's go see what the market did when we got there. Okay, so we're going to roll on over. And notice, this time through, right, we know this is resistance now. Why? Prior support equals resistance. And this is exactly the reason why a lot of traders, instead of taking the trade right in, will wait to see evidence that the market's going to hold. And that's something that I go over in the room and that I go over with my individual coaching clients. I'm not going to quite cover it here, but what you'll see is we blasted right through. We extended above. We are now, right, this is 10:30 in the morning. We're now above resistance, right? We know that we have the single prints here. We come for a backside test. This is what everyone in the early Asian session was hoping for. We push out, right? And you'll notice that in that process, let's see if I can get this to print. I gotta get out of the drawing mode. Got it. Did not mean to lose that completely. And I did. Let's see if we can get back there real quick. Put this on pause for a second. And you can see right here, we've cleared right through resistance. If you shorted this, right, you had to be very aggressive. And what I would have preferred to see is a push in, reject out, a backside test, maybe a lower high, and then a push lower. Instead, what we got, right, we are now back above resistance, backside test, higher highs, higher lows. You can see the trend line was never broken in this process. Wow, I didn't mean to do that. Let's see if I can fix this. But you'll see, not only did we push above, we extended up, right? So this is 33, almost to 41, and then we make almost a 10-point rotation back. That's one of the golden rotations that I coach. And then we take off to the upside, right? So now we have a pretty good idea of what the market might do at that LVN at that point, right? But what we want to do is we want to see evidence, right, that it was able to hold or was able to push back and then look to take a position, unless you were just uber aggressive and certain that that's going to hold, right? So what I always like to do is go back and find one more example of that. And since I don't do these very often, I like to do a thorough job. That's exactly what I'm going to do. So give me just a second. I'm going to pause this. We had two very unique areas right here. We're going to able from 57 to 62, and again from 64 to 67, that were very, very poorly auctioned. You can see it here in the 24-hour graph. So I always wonder again, how might the market treat that so I can anticipate it in the future? So going through the same process, first I'm going to highlight it here. See if I can get this done correctly. There we go. And we'll highlight this. There we go. We're going to right click, copy window, right click, paste window. Then let's remove this. And let's just bring it right in so we can see it. Change our time frame to a 5-minute time frame. Okay. Now, this was generated on the 20. There we are. This was generated on the 21st, right? So how did the market treat it when it got back into that area? So if you'll look, right, throwing some candlesticks in there just for fun, right? So this is when this was generated. A few days later, right? Spreading all the way over to the date of the 28th, right, on March 28th. Notice we punch in, right? We punch in, we reject out underneath, we come back. We have one of my favorite trade setups, right, where we come down, we punch out, we make a lower high, right, from this point, come back to make a 50-60, and then we promptly roll to the downside. But remember, there's still two areas above. So all we've done is taken care and re-auctioned right up to approximately this point, and we've now lifted, right? So the market's now shifted that resistance point from 57 to 62, and now it's from 59 to 62. Let's go see how the market treated that going forward. So we come back up, right? And let's see if we ever can get back in there. So notice we come back into resistance again, right? This is an early US session. Market has a memory, rejects out of that area again. We push back in. Now notice, really subtle hint here, right? See how we came in? We've already re-auctioned. This is no longer as poorly auctioned as it was. So what do? We come in and we just tippy toe right into 59.46. What is this telling us? That those low volume auctioned areas are very, very important, right? Again, if you'll notice, we reject out, we push down. This is the end of the day, so there was not a lot to do. And then look at what the market does. Lo and behold, in early Asia, we come through and we push all the way up into the 60-62. This now completes that first area where we had a low volume node, and once we complete that, you'll see that we were rejected down. We make the push lower, back into support, right? Because these are now support areas, right? And when we come to the US session, you can see we've now completely broken below that 57. Now look what happens at US Open, right? This is 8:30 in the morning. Remember, all of this has, on a 24-hour basis, has now been re-auctioned, right? So the next logical area for the market to want to take out would be that unauctioned area just above. Now let's see what happens. Notice it pushes right in, and we reject straight out of it, right? Where do we straight back to? Former resistance becomes support, right? And you'll notice that we come back up and we spend the rest of the day balancing. And that also means that we now have this one little tiny area, the 66.75 to 67.75, that has been very poorly auctioned left. This is going all the way back to the 21st, right? And you'll notice we come back down. We're still in support. We've pushed down. And are we at this evening now? We are not, and we should push right to it on Friday, 66.75. And what's left now is 67.75 to 66.75. So you can see that the market very carefully has gone through and auctioned and re-auctioned in a very methodical fashion the areas where it left those single-digit prints as we auctioned through there, right? And all of those areas, right, were areas of potential rejection, right? So when we come back to our chart now, and we come back to our 24-hour ES chart, and we look at what's available to us, pull this down. So we know, coming in, that we have single prints right here. So I would expect initial rejection out of this area, right? But if we get above, that will be support. If we get above support, right, what I want to know is what's above there and what can help me out in terms of auction, right? And so as let's see if I can compress this down. See if I can open this up a little bit. Fixation always makes it a bit difficult. don't know why they don't let me. There we go. As I spread this out, wow, they don't want to let me see the TPO there. I don't know why. Let's see if I squeeze it in, squeeze it out. Let's try it a little bit more. If not, we will. There we go. And you'll notice this is actually better auctioned than it was prior. Notice where I would now expect rejection. See where we have this area right here, 77 to 78. Now, remember, it can pass through there. It can just simply shoot through. There's nothing that says it has to stop. But my guess would be, based on where we're closed, so I know that I'm looking for potential reversal from 23.46 to 23.43. Now from a TPO standpoint, I know that I'm expecting 23.77 all the way up to 23.79. Right? And when we get into those areas, I expect at least initially some type of rejection. That's normally what happens, although when the market's violent, it can pass right through it. Also to the left, you'll notice that I have a high volume node sitting right behind it at 23.79 and up towards 23.80, and I would expect that area, 23.79 to 23.80, to cap it. Why would I expect 23.79? So somewhere between 77 and 23.80, I now expect resistance. Why would I expect resistance? Well, first of all, the normal range in ES is 7 to 15 points. We're currently trading 23.60. That was approximately Friday's close, right? And I know that gives me approximately 20 points up, approximately 20 points down. And that gives me key areas to look for to find my key reversal locations on the market where I might find exhaustion, right? Everything else in between is just looking for details. Okay, so hopefully that makes sense to everybody. It takes practice, but those are my key areas for tomorrow, right? The other thing that I'm going to put to my trade plan. So now let's go back and let's get rid of the volume profile altogether. And let's go look at what the market's been doing as a whole, right? So when we can take a look at a big picture here. Let's crunch this in, bring this down. Well, supposedly we'll bring it down. Let's crunch it in a little bit more. There we go. Okay. Okay. When I look at this chart, right, what's the first thing that you see? We're in bull mode, right? Buyers are in absolute control. This was the point of the breakout right here back in early February. If we pull a 50-60 retrace from the point of the breakout, which occurred right about here, I do a 50-60 retrace, you'll see that we've run right back to the 50-60 retrace location in general, and we've bounced off of it, right? Now, we're kind of caught in the middle because this resistance area is right into the 50-60, and we're kind of bouncing in between. But my guess is if we can resolve above Friday's high of 23.67, that we will push towards, again, that 23.77 to 23.80, and if we can hold that area, right, we have very little above holding us from hitting a breakout at 2400. So it's a very bullish picture. There's nothing bearish there. And I also know that the market operates on higher lows and higher highs. And if you'll notice, we obviously have higher lows and higher highs. But one of the things that would have to happen to turn us bearish is first, we'd have to hold behind the 50 retrace, right? And we've also started making a series of lower highs on the day time frame. But guess what? Draw a trend line there, right? There's two trend lines, one here and here, then one here and here. Okay, and odds are, if we break those trend lines, just like we did here, I'm going to show you back here in early December, right? See how we went through the same process. It looked like we started making lower highs. We never, right? We never penetrated back into the bulk of the consolidation before the breakout here in early February. Here's the bulk of the consolidation in December. We never penetrated below, which told you as a trader that yes, there were some days where there were good shorts, but the majority of the trades were good to the long side, right? And you can see that if we can get above and hold above this downtrend line right here, this 2380, which again is where the resistance is, we gap above it, there's not a lot to hold us from shooting to 2400. Not that I expect that tomorrow. Also remember, tomorrow's Monday. Monday and Friday are the lowest range days of the week, and normally we would look for balance, right? So now let's back it up one more step so that we can figure out what we're looking for tomorrow. When we came into the market on Friday, right, and we looked at, let's try to stretch this out a little bit. Let's grab a new chart here, and let's go to a 15-minute chart. Okay, one of the key elements I'm looking at when I'm trying to make my trading decisions as to how I want to trade, and of course, I'm not going to give away all my trading secrets. Obviously, it wouldn't be fair to the people in the room, but just a couple of quick notes that I'm going to coming into this Friday morning. Now, this is 8:30 open. On US session. First thing I'm going to note is that my swing low came in London right here. What's the first thing that I know? That if I don't get below, if I do not get below that London low in the US session, that there is no bearishness, right? We got to get below London session in order to have a down session in the US. Secondly, this right here is my prior day session to the downside, 2353.77. I have to get below and hold below that prior day's low to move down. Obviously, at the open, neither one of those happened, right? And you can also see prior to coming into the day, we did have a downtrend, right, from the prior session coming into the US, but that had already been broken, right? And we had already started an uptrend line that was not broken until the very end of the day. Okay, see how we backside tested it there at the very end of the afternoon? So all of that told me, first of all, when I came into the day, downtrend had already been broken, right? We'd been pushing up, right? I was unable in the overnight session to even retest prior day's RTH or 24-hour low, right? So what does that tell me immediately? Hey, buyers are still in control, right? I want to look for a long side trade, right? I know that Friday's a narrow day range. I'm likely to get balance, and I know that I have that TPO area up there that's very, very thin, right? And you'll notice that we came right up to it. The following day, we one ticked back up into it on that day session, and we rolled down. Now notice, once we rolled down in this session, I'm going to step you all through this step by step on a 15-minute. You can see we tested down, and we immediately hammered back up on the 15, right? I want to show you all what this looked like on the 5 so everyone understands what we were dealing with here. On the 5-minute chart, okay, on the 5-minute chart, this was our overnight swing low. This, after the break of the trend line, right, this was our swing high coming into the US session. We tested back down to retest the uptrend, right, and immediately responded back up. On a 15-minute chart, that generated a hammer, right, and the most logical place for the market to go, since it could not break that trend line, was to come back up and push to the upside and retest the highs from Friday, which we were unable to do in the London session. Once we completed the auction back up, we rotated back down. Notice the size of the rotation here, right? Really critical information, right? We came down to 23.59 and we rotated up to 23.66, 7 points. The average rotation lately has been 7 to 15 points, and we know this is a critical area. Additionally, I'm making higher lows and higher highs all the way through coming into the US session, right? So when I look and I find a responsive buyer right here and I note I'm not able to break this low, or this low off the 24-hour, right? I'm going to go, hey, maybe buyers are back in control. I'm looking for a push to the upside. Again, we have specific patterns and techniques we're looking for to get that push to the upside, and then the market slowly grinds. You can see that we establish a trend line to the upside, right? And the one thing I don't want to be doing, it's a key rule in my office, even though the HVN provided perfect resistance, right? What I want to see is a break of the uptrend line. We got that here. I then want to see a retest back up, which we got, and then finally at the end of the day, which by the way was too late for me to short. I generally do not short at the end of the day. We pushed all the way down. We break the downtrend line, but notice, even though we break that downtrend line, we still fail to get below London low or come anywhere close to testing prior day's low or even prior day's RTH low. We just don't get there, right? And then tonight, if you look, we opened up, we backside tested the uptrend line from Friday, right? See how the market's working so mechanically? We came back up, tested the backside test of the uptrend line, right? Notice, see all the rejection that we had here? These are inventory supply bars right through here. We came up into those inventory supply bars, right? They provided rejection back to the downside. Now we've come back up once more, and my guess is if we can trade above 2360 and hold, that at some point tonight we should backside test 2360, and that should let us start working our way back up and completing that area, back into 2377 to 2380. That would be my next upside. I'd be very weary or cautious about shorting above 2366 to 2367. That would be indicative of a potential breakout, right? And what I want to see in the morning when I come in, first thing I want to check is, are we trading near or above either the Friday's high, right, or the overnight high? Once we get above the 60, are we holding this area? If we open above this area, I really want to be cautious about shorting until, if I'm a very aggressive short, until I'm back underneath 2366. I want to see some type of swing low get broken, right? Conversely, if we come in and we're trading below 2353 and we're unable to recoup 2353, I'm going to look for a retest down into where are my primary targets below? 2346 to 2343, and behind that I have 2341 to 2342, and those are all key target areas for me, and I'm looking for pattern and structure in terms of tick divergence, higher lows to get broken, responsive buyers and impulse moves up out of that area for me to find location to get long. So again, to put into context, we know where we have resistance above and below. We've demonstrated how mechanically the market's operating right now, that buyers are in overall control, that the average range is 7 to 15 points. We know on Monday that the range tends to be somewhat restricted, right? It's Friday and Monday are the most restricted days of the week, right? And then I'm going to assess once the market opens. First thing I'm going to ask is, are we above or below this 59.60 area? That becomes very important for me, right? Trading below, I'm going to look to see if we can't roll down and then come down and test that 40 area. Conversely, if I'm trading above 23.60, right, on tomorrow morning, right, but below 23.66, I'm going to look for a backside test and potential reversal patterns to push me back up. If I'm trading above 23.66, I'm going to look for pushes down to hold that 23.66 to 23.59, and then look for the patterns that will start marching me up to that 77 to 80 location in the morning, right? Remember, if you're a day trader or a scalper, the best place to get your trades going in the AM are before 12 o'clock. After 12 o'clock, it tends to get choppy and a little bit sloppier. If you don't have a written trade plan, if you don't know exactly what it is that you are looking to do in your trade, you should look for a trading coach, whether it's me or someone else out there. There's a lot of really good, talented guys out there. It's worth the investment. It's so much better than paying tuition out there, guys. So anyways, my name is Simon. I am opening the room up to people again. If anyone would like to come in for the room for a 5-day free trial, simply email me at tradeandperform@gmail.com. We would love to have you. And at any rate, members, support resistance levels have already been set out. Those are the key levels for tomorrow. And I am looking forward in the room. I will cover the key setups and what we're looking for to pull a little bit of money out of the market. And I would like to try to get that done before 12 o'clock tomorrow. So everyone have a great night. Again, my name is Simon. And remember, this is for educational purposes only. Nothing in the video should be taken as trading instruction. So buyers are in control. Caution on the fade. We're trading at 23.59.50. And I'm signing off. Good luck in the European session, guys. I'll talk to y'all later.